Wall Street opened the week on a cautious note with a low activity. Investors shifted focus to economic data and political news. They refrained from large bets ahead of a fresh inflation data. Today, the market got to know the highly anticipated report and a new piece to the puzzle about the Fed's agenda for interest rates. As expected, the US stock market traded sluggishly on a Monday. The Dow Jones was the only stock index to close with the gains, as it found support from a Boeing, which jumped by 4%. The S&P 500 traded almost flat yesterday and closed with a downtick. The index shed 0.08% to close at 4,411 points. The benchmark stock indexes traded in the green in the New York pre-market. Futures on the stock indexes added 0.05 and 0.32%, reflecting market expectations of the fresh CPI data. The futures surged by more than 1% following the inflation report. The S&P 500 is likely to trade in the intraday corridor between 4,440 and 4,510 points. The index closed on a Monday a bit lower because investors waited for the CPI data with a bated breath. Though the CPI was the main factor to subdue the market boost, the downgraded outlook for the US credit rating did not encourage optimism. Yesterday, the Moody's rating agency cut the outlook for the US credit rating from a stable to negative, citing large fiscal deficits and a decline in the debt affordability. In the light of this event, investors were unwilling to make trading decisions before the deadline at the weekend, as the government shutdown could be around the corner. Futures on the stock indexes went up on a Tuesday because the inflation data that provides the key to the US Fed and enables the market to predict the further Fed's policy move came as a pleasant surprise. The CPI came in below the consensus in all its aspects, defying market expectations for the core index at 0.3% in October. The actual figure was 0.2%. Core consumer prices eased on the back of falling energy prices. The annual inflation rate went down for 5 months straight. In turn, the headline inflation was widely expected to decline in tune with the energy prices, and the CPI also surpassed the consensus. The actual CPI looked flat gross in October on months. The annual rate was at 3.2% versus the 3.3% increase expected. The red-hot report instantly triggered a burst in volatility and a rally in risky assets. Futures markets were optimistic about the scenario of the Fed keeping interest rates unchanged before the CPI report. The fresh data cemented such confidence. Later today, investors will be alerted to the Fed's policymakers, who will make their comments on the actual picture. They might both support or discourage market optimism, Fed Vice Chair for Supervision Michael Barr, Cleveland Fed President Loretta Mester, and Chicago Fed President Austin Goolsbee are on investors' radars tonight. The currency market also clicked into gear following the inflation report. The euro and the pound sterling instantly jumped by 0.9% against the US dollar. All major currencies also followed suit. As a result, the US dollar index lost 0.7% to trade at 104.80, and the lowest level of mid-September. The intraday corridor for the instrument is seen between 104.60 and 105.10. In recent days, Fed Chairman Jerome Powell and his colleagues tried to dispel expectations that the central bank had completed its cycle of aggressive rate hikes. Some experts and the futures market didn't believe the hawkish rhetoric of the Federal Reserve, and now this scenario is even less realistic. The report clearly proves that inflationary pressure cooled down, though it's still far away from the target level of 2%. The progress is obvious. The market has to digest the producer price index. However, the US dollar can find support from nowhere. Alongside slow employment, easing inflationary pressures points to bright picture for risky assets. The Canadian dollar is trading sideways intraday. After the inflation data in the United States, the loonie promptly joined the beneficiaries of the US dollar's weakness. Before the opening bell, the USD CAD pair slipped by 0.28% to trade at 1.3876. The instrument is expected to trade in the intraday corridor between 1.3730 and 1.3789. The Canadian dollar has a good excuse to take advantage of the greenback's retreat and the minor recovery in oil prices. Global oil demand is still complicated to predict. Hence, the commodity-reliant loonie may show muted growth. The crypto market gave a weak response to the inflation data. The bulls and bears are trying to assert their strengths with a modest success, so popular crypto assets are trading with the same dynamics. Bitcoin opened the New York session at about $36,530, 0.10% up. The basic scenario suggested trading inside the intraday corridor between $36,350 and $36,780. The exit beyond the borders will either push the price down to $36,120 or up to $37,120 or even higher. Your feedback is appreciated. We are always open for your questions. Subscribe to InstaForex TV channel and be aware of hot market trends. See you online tomorrow.